This week in the market has been a wild ride for investors, with the S&P 500 and Tesla both dropping sharply. In this video, I'm going to walk you through the market condition that caused these drops and why now may be the perfect time to take advantage of investment opportunities in the market. So if you want to learn how to stay one step ahead of the market, make sure to keep watching. All right, so we have the three screen setup here. We have the monthly time frame in the top left-hand corner, and on this time frame we have major levels of support and resistance drawn in automatically, so we can get an idea where price may reverse if it does reach these points. The top left-hand chart is the weekly time frame, and we can see we have trend filter colors here, and green when we're seeing bullish activity, and red when we're seeing bearish market, and grey when price is either consolidating or forming a deep pullback. And the same on the daily time frame at the bottom. We have green, grey and red, and both the weekly top right hand corner and the daily at the bottom have moving averages. So the blue line is the 20 simple moving average, the orange line is the 50 simple moving average, and the black line is the 200 simple moving average. So let's look at the S&P 500. The market has seen deep declines this week, so let's look at the index, the S&P, to get a bigger picture of what price is doing. So the long-term trend for the S&P is bullish, and this trend began all the way back in March 2009 at the end of the 2007-2008 market crash. So price has been in this long-term bullish trend, and recently price went into this area of consolidation. I say recently, but this started back in January 2022 when price reached a high of $4,819, and then we had a decline through to October 2022 where price created a low of $3,490. Since this low, price has been recovering nicely. It looks strong all the way up until July. Then as we went into August, we saw weakness in the market. Price declined but closed much higher than the low, forming this reversal candle. It did appear that price was likely to bounce further to the upside following this reversal candle, but as we went into September, we could see prices just displayed signs of weakness, forming a bearish candle at the moment. Now, historically, September is usually the weakest month of the year, and it's proven to be the case so far. But let's see how price closes by the end of the month. If we have a big bearish close like we are seeing right now, then we're likely to see further weakness to levels of support. But if price closes as a reversal candle similar to the candle for August, then we're likely to see a bounce to the upside. We tend to see trends form from October. So as we go into the end of September, we anticipate price will likely find support and form a base before resuming the longer term bullish trend. Now, if we go down to the weekly time frame, the bars are currently grey. Prices above the 50 and the 200 simple moving averages. We can see this past week's candle, a big bearish candle, which broke and closed below this recent low from August, the middle of August, at $4,342. Now, let's draw in some lines here to see where price may form levels of support. So we're going to get this horizontal tool here. So draw it from this high from August 2022. We can see price has now tagged this level. So this is the strong level of support. Price is now around this zone. If I just zoom in a little closer, price did actually come to this level in August, and we saw a bounce from this zone and a move to the upside. Now price has actually made contact with this low. We now want to see what price is going to do next. What we need to see is a bounce from this level and a move back to the upside. But if we continue to see weakness, then there's another level of support just below from the January 2023 high at $4,198. So price may come down to this level as well, which is a strong level of support. And if this fails, we have the 50 simple moving average. Following that, we have the 200 simple moving average. So we want to anticipate levels where price may bounce, because this is an area that we may take advantage of, because if price bounces from these levels of support, then we can anticipate a resumption of the long-term bull trend and prepare for long opportunities in the market. We can prepare in advance if price bounces from these levels of support. So when everyone is running in fear, we want to be taking advantage, and this is when you want to be greedy in the market and take advantage of opportunities that may come your way. So let's see if price will bounce from this level, and then we can look for strong looking stocks which are breaking out of previous highs. Now, if we go down to the daily time frame, the bars here are red. Prices below the 20 and 50 simple moving averages, but above the 200 simple moving average. And we can see that prices form this pattern of lower lows and lower highs, and this is why it's crucial to identify levels of support. So based on this time frame, we have the 200 simple moving average at $4,192. If I just go back to the weekly, $4,192 is just around this level here. So we have a cluster of supports. We have this high, this previous high, which is acting as support, and we have the 200 simple moving average around the same level. So this may act as a stronger level of support, forcing price to move further to the upside if price actually fell at this first area of support where it currently stands. So the S&P overall is bullish, and we're just waiting to see where price may bounce from. If it does choose to bounce from either of these levels of support, then we can prepare ourselves for long opportunities in the market. Now we're going to switch over to the last chart, which is for Tesla. Now Tesla is displaying signs of weakness as well, but if we look at the overall trend, Tesla is not doing much at the moment. We had this bull trend between 2020 and 2021, but from this high in November 2021, price has been in a decline. This decline from this high to the low was a decline of 75%, and if we measure from this low to where price is currently at, this is a recovery of 136%. So price has made some progress climbing to the upside, but it seems to be finding barriers along the way. We had a bit of a hurdle between February 2023 and April 2023 where we saw a decline, but this is normal when price is moving in a direction either to the upside or the downside. We're going to see pullbacks along the way in areas of consolidation. Right now, price appears to be forming an area of consolidation from the high of July 2023. So let's look at the weekly time frame. The bars are grey at the moment. We had a grey candle on this past week, and prior to that we had a green candle and a few more grey candles. So price is not doing much right now, but it is respecting this 200 simple moving average. It did dip slightly below this level from December 2022, but then started to hover around the 200 simple moving average and has remained above the 200 simple moving average since. But if we continue to see weakness, price may come back to tag the 200 before resuming the long-term bull trend. And if we look at the daily time frame, the candle for Friday closed bearish, and we had a red candle, and we had a few grey candles before that and some red candles. So when we're seeing a mixture of green, grey and red, it usually indicates an area of consolidation. And when we see price consolidating, the behavior of the asset becomes unpredictable. So we want to wait for major levels of support or resistance to be broken. Seeing that we are seeing a recovery from this low back in January 2023, we anticipate a break and close above this high from July 2020 at $299. So just around a $300 psychological level of resistance. So because price is pulling back now, we want to see price find the base and resume this bullish momentum and then eventually break above this high. If it does, then we should see further moves to the upside. But if price breaks this pattern of higher highs and the higher lows and breaks down below this low from August 18th at $212, then we're likely to see further weakness. But we still have the 200 simple moving average, which could also act as a level of support. So right now Tesla is consolidating, and we just need to wait for a previous high to be broken to anticipate further moves to the upside. Hope you enjoyed today's video. Hopefully we start to see the bullish momentum return back into the market. If you want to catch all of our videos as soon as they are released, don't forget to like and subscribe to the channel and hit that notification icon so you can be alerted as soon as our videos are uploaded. See you all on the next video.